Private companies do not have to disclose information publicly. So you may find nothing on the internet. So you go call them, find out. Then they maybe choose to send you some information, but not all. And then you try and piece together and say, okay, this is what this sector and this company looks like, which means you could do maybe 5. You could do 10 benchmarks, and that might take you 3 months. If it's out there, AI will find it. If somebody put anything about me, it will be able to boil the ocean and collate. So instead of being able to only do 5 companies in the due diligence comparison, I might be able to do thousands of companies across the world and say, well,
welcome to AI Experience, the podcast that demystifies artificial intelligence. My name is Julian Rodersperger, and we are going to find out how AI is changing the world. And I'm super happy to welcome Khushboo Jha. She is the founder and CEO of BuyProperly, an award-winning AI-powered platform for investing in alternative assets, such as real estate. So today we will talk about investments, AI, and fintech. Thank you for joining me. How are you today?
I am great. Thank you for having me, Julia.
Yeah, thank you. Thank you for being here. We're going to have a lot of discussion about AI, fintech, investments. That's going to be super interesting. But let's get started first, like for listeners who aren't familiar with it. What exactly do we mean by private market investments, and what's the difference with the public market?
So let me start with the public markets first. Public market is what everybody understands. These are the stocks of companies or bonds that you buy on the stock market, NASDAQ, NYSE, TSX. Usually you are buying and selling stocks or bonds in companies on your own. So you don't need to contact somebody. You can go to the exchange, trade online. It's easy to do. It has a lot more technology and systems in place. You can go and place an order and immediately buy something. The way the NASDAQ and public market is structured, to be on that exchange, a company has to share its financials publicly. Mm-hmm. So I don't have to ask Jeff Bezos for sharing his financials. It's available. I can go. If I like it, I can buy. Done. No need to know him personally and no need to ask for anything. It's all available. And so that's what a public market is, and people are familiar, ETF stocks. Private market, on the other hand, are private companies, which means they're not listed on the stock exchange. And so, for example, my startup is a private company. To buy stocks in my company, first, you need to know me. Second, I need to agree to give you any information and have you as my investor. And then I can give you information and you can make a decision, and I may still say, I don't want your money, or I will only take your check if you write me at least $1 million. So that's the private market. It's based on my discretion. It's not easy to trade and buy, and it's not required for me to release my financial information publicly, broadly. So those are the big differences between public and private market.
Okay. And for private market investments, that means I can buy pretty much anything. Companies, real estate, maybe, I don't know, piece of work, art, culture, wine, cars, anything.
It could be anything. It's a private setup. That's it. So it could be a real estate it could be a fund. It could be a debt fund. It could be a mortgage. It could be a private mortgage. Mm-hmm. It could be you're buying art, like you said. You could buy wines. You could buy vintage cars. They will all fall under private markets. Often, the reason they're not in the public market is they're not necessarily standardized. So my house might look very different from yours. It's hard to say your house and my house are both worth X, and therefore the shares are worth X. It is tricky. Or if you are comparing Sylvester Dali versus Picasso, it's not the same. It's different.
Okay. And so how did you see the private investing evolved over the last, let's say, 10 years, for example, like especially for individuals who aren't institutional investors?
Yeah, so private market has always been available to institutional investors. They can write big checks. People want their investment money. And so institutions have been investing for always. Yale Endowment is the most famous one. They're known to invest almost 50% of their overall assets in private markets. And they are considered the top performing asset manager in the world forever. Not once, not twice, just decade after decade, they are the best. And so the institutions, the pension funds, they already do this. For retail investors, they don't have access to this kind of investment. When it started changing was, I think the biggest trigger was the Jobs Act of 2010 in the US, which for the first time opened up the concept of crowdfunding to say, okay, you can take small checks from anybody without having to disclose audited financial statements. As long as you take small checks, anyone can participate if they want to. So that was the first opening up. Then more regulations came in the US. Then more regulations came in Canada to say, okay, you don't need a detailed prospectus and all of these rigorous financials. But if you declare at least this much, you could take a little more money from more people. And so a little kind of like a middle path. And so I think 2010 Jobs Act in the US was the big trigger. And then over the last, since almost 15 years, it has evolved into allowing more people to invest in private markets, albeit with some restrictions at times, but mostly designed to protect the investors from getting duped.
So that means it's easier today than it was 10, 15 years ago.
It was near impossible 15 years ago. It is very, very possible today. And then, of course, technology has helped that because now you have tech platforms that can make this whole process easier. Because when I take money from a random person, I have to run KYC, I have to run AML, I have to make sure the money is not fraudulent, that you are who you are. Those checks and balances in the era of automation and the tech advancement means I can do it faster and cheaper.
Okay.
Versus if I didn't know you, how do I check that the money is legit? It's not fraud. It's not, I don't know, like drug money. There's no way for me to check those in a easy manner. And so technology plus advances in regulation together have allowed it to do much, much more today.
So that means if you want to buy something on the private market, you need to do your due diligence, make sure this is a smart choice. Before AI entered the picture, what did the due diligence process look like for private deals?
Well, the due diligence process has remained the same. You're looking at the same set of risks, and they've probably been the same for the last 100 years. You look at macroeconomic risks of an investment. So what are the overall external the GDP, the income, the industry, those risks. You look at sector specific risks. Is oil a sector that's going to do well or not well? Is robotics a sector as an industry? Is it in favorable space right now or not, because of maybe the chips are too expensive? Whatever the reason, there could be a constraint. And so then the sector specific. And at the end of the day, it is project specific risk. So I am building a robotics company and I studied textile engineering. It's not the same risk as somebody who has a PhD in robotics, starting a robotics company. But then I might have a team that has that. And so now you're evaluating the execution risk. And so these are the high level risks. In the absence of AI and technology, you just did one by one. And I've done that in the start of my career. It's like create an Excel, find out the possible companies. Some of them have remember, private companies do not have to disclose information publicly. So you may find nothing on the internet. So you go call them, find out. Then they maybe choose to send you some information, but not all. And then you try and piece together and say, okay, this is what this sector and this company looks like. Which means you could do maybe 5, you could do 10 benchmarks, and that might take you 3 months. With AI, what you can do, if it's out there, AI will find it. If somebody put anything about me, whether it was a bad review, a good review, or anything else, it will be able to boil the ocean and collate. So instead of being able to only do 5 companies in the due diligence comparison, I might be able to do thousands of companies across the world and say, well, here are some of the successful companies in Australia, which I've never traveled to, but AI can let me pull that and say, these are some metrics of what success might look like. And so if your company looks like this, great. And so that's what AI has done, is being able to boil the ocean to bring it down to a narrower shortlist. It doesn't eliminate completely some of the work.
So your company is called BuyProperly. What exactly do you do to help this process? How do you deploy AI into the due diligence process?
Absolutely. So we use AI at various stages of the entire investing process. Due diligence is one of them. So let's talk about due diligence because you picked that one. For due diligence, like I was describing, what we would do is we would look like at a 100-year data. Well, not for everything you will have a 100-year data, but sometimes you will have a 20-year data bank. So there is data for the last 20 years of the private equity industry and the companies that they invest in. For example, it's possible to get that data. So we can literally boil the ocean and shortlist. Then there's actually meeting Khushboo or Julien or whoever the company owner is and the team is, and trying to understand their motivation, their ability to execute their thinking patterns for future. But at least the data that's out there, you're able to boil the ocean and shortlist the right comparables and metrics and the right investment opportunities. Then you know, okay, these five already meet my criteria. Now it's up to me to do the final test to see whether they will hold water in the future. So it kind of helps you look at a much, much broader space than if you were doing it manually. Like if you're looking at properties yourself, you can do five. But we can run the entire Canada MLS in 3 hours and tell you based on your criteria, these are the three. Now you go check and find out whether it meets your actual needs or not. But we looked at everything. That's the difference.
Okay, so I understand the due diligence process is mainly make sense of a lot of data, and because it's data, AI could be extremely useful. What are the other steps or processes where you use AI at Buy Properly?
Yeah. So end to end, we are very technology platform centric thinking people. And so we try and leverage AI wherever we can to do things better, faster, cheaper, all of those things.
Mhm.
So there is checks and balances done on the investor as well to make sure that you are the right investor for this investment. Like you're not taking undue risks, for example. You're not going to sell your house and invest in something that's risky. Those are the basic checks and balances that we make sure up front we do before you get too far down the line. And of course, you will speak to your advisor and take financial advice and all of those standard things. But even before you get there, we'll make sure those checks and balances are there. If somebody's trying to do fraud, we use AI for that. We use AI a lot for cybersecurity. Detecting if anybody is trying to get into the system from anywhere in the world all the time. So we have a lot of AI penetration testing. And so those are some of the ways we are doing. We're also using it for data extraction. So one of the challenges with private markets is data is in PDF, in email, in a conversation, in a podcast, like right now. So if somebody wanted data about buy properly, they will come across this podcast. So our AI and thanks to the large language models, this has become more mainstream and therefore cheaper. We can look at all of this and then summarize. That's another place we use it.
Okay. And so when you realize that AI could change how private investments are evaluated, monitored, is it like because of ChatGPT or could you do it beforehand? And what did AI, generative AI, change in the way you use AI on a daily basis?
When we started about 5.5, 6 years ago,
So that was before ChatGPT was launched.
it was before ChatGPT, and we were already using AI models to reduce our own costs. Like we are a small startup, we cannot afford to hire expensive investment bankers who can do that level of due diligence. So we hire a junior banker who can build the AI model,
Mhm.
who can do the work of an experienced banker. So that was our hack into doing good quality work without spending the same amount, which is why we started long ago. My background, I used to work at Amazon. So I personally had been using AI forever. Like since 2014, we were using it for categorizing, for cataloging. Then I worked in the Alexa team. So we were already doing the voice AI pieces, all of the judgment conversations that Alexa does. So my default assumption was that you could train AI models to reduce some of the process inefficiencies as well as process costs. That is something I was already familiar with from my past experience. And so coming into BuyProperly, I was under the hypothesis that private market inefficiencies should be able to be improved upon with the help of tech and AI. So that was the starting hypothesis. Obviously, large language models being mainstream changed that, because now that's just much easier. I don't need an army of data scientists. We can build on, my data scientists can now build on top of the large language models. Otherwise, we would have had to build our own model. But the model is now easily accessible. We can take that and then build our context and layer on top of that, allowing us to quickly do things versus starting from scratch. And so it's definitely been a leapfrog for us as well. Like even just reading documents. Now there are large language models trained on financial data that can read these documents better, so we can layer in our inputs on top and build the application faster.
Okay. And do you think AI could be helpful to change the way people see private markets? Because it may have been criticized for opacity. Like, how can we make this space more transparent? How can we know this is a good place to invest in, or maybe this is a deal I cannot miss, etc. Is your company like a marketplace that bring like buyer and vendor together?
We are a marketplace, so we make sure that the software supports both sides, sort of like an Amazon. So we will provide the infrastructure so that the process goes smoothly and correctly and compliant manner.
Mhm.
And then obviously, you are like a marketplace, you have people raising capital and people looking to invest, and it brings them together with some advisors in the play. Of course, there'll always be some advisors. We are not advisors, so we do not provide any financial tax advice at all. We just provide the system process automation. And so, in terms of will AI help change the private market, I do think it will help. And that's based on my own experience as a small private company. One of the reasons a lot of the private companies do not have so much information, because it's a lot of work. Not everybody is trying to be opaque, but doing this on a regular basis is time and money. And some of these services, like accounting and financial services and fund services, are very expensive, which means it is a huge burden for a private company or a smaller private company, especially, to actually undertake that. And so they kind of trade off and say, okay, a fewer set of investors will invest, but at least I'll not incur that huge expense on an ongoing basis. What AI does is helps reduce some of that costs, simplifies the process, which means there's less operational burden and less cost. So there's more reason for me to share more information if I am a genuine company trying to build and grow. And so that's where AI is handy. Is it already there where it can help investors make decisions? Not yet. Because first, the private investments and deals need to be on that AI model, make data available, take the data from documents and scanned sheets. I literally get scanned handwritten notes sometimes as part of an due diligence memo. It was like, no, like, yeah, this is all I have. These are the drawings and these are the notes. Like, no. And so from there, it needs to get into this structured system. So that's the first step. Once the data is in there, then investors can leverage more AI to run the data and say, okay, what's good and what's not. So it will be some time, but it's already changing the life of the private companies.
Okay. Could you give us some examples of investments we can make on your platform? Is it only real estate, or do you do something else?
We have a wide range of asset classes. So we do have a lot of real estate, but we also do private equity and private credit
Hmm.
investments on our platform. So we would have mortgage funds, other private funds. We have private companies. So, for example, in the biotech sector, in filtered water sector, so diversified away from real estate. The idea was that the marketplace should let people invest in um, in a diversified portfolio, and that cannot be all real estate. It should be real estate and non-real estate. So it allows for all.
Okay, and you operate in Canada only, or US and Canada, or anywhere in the world?
US and Canada. Our technology, however, so we also license our technology as a SaaS platform,
Mhm.
works globally. So the SaaS will work globally.
And what's the biggest misconception people have about using AI for private market investment?
Where people sometimes feel that AI will just tell them, like an Amazon recommendation, oh, this is what you should invest in. But it's not there yet. It's not a robo advisor. It's very far from a robo advisor. I think where AI is handy is at best shortlisting, or at best identifying what maybe some areas you should look at. But there's a lot more suitability, or what matches your needs and stage in life requirements in the private market, because it's not easily tradable, because there are higher risks, because there is more opacity. You may not be able to use it as a robo advisor, not yet. And people think it's just like a robo advisor, but it's not.
It makes me think of another question about hallucinations. So, hallucination is the capacity of an AI to create fake data, places, numbers, people, etc. How do you deal with hallucinations? Does that mean you have to review carefully everything the AI just gives you, or and how do you manage? How do you do some risk management here?
So people have been using hallucinations for AI, but let me clarify. That's not true for all AI.
Mhm.
We have been using AI forever. AI doesn't hallucinate in general. Generative AI that's specifically used to generate content based on content out there might use some wrong content to generate some wrong content.
True.
That's the hallucination. AI, as such, for a lot of users, has been in play forever and does not hallucinate. It's in the context. Only generating content for random content out there is where that applies. The rest of it is good to go. So when we have a model that is running Excels and doing financial, there is no hallucination, because it's not using internet content to create content. So it can't go wrong. It is using numbers from a specified document to create a structure in Excel specified before. There is no room for hallucination. And so that's one part. And so only in the case of content generation using a large language model does that apply. The rest of it is good to go. Anyways, natural language processing and large models have been around for a long time, and so they are fine. And on the hallucination piece, we are not using generative AI for our core processes. That is used for marketing content, and that's okay. Not for our core process. Those are purpose built AI models that our team has built
But
internally.
when you ask AI to do an executive summary of a very big, heavy document, for example, you don't use Gen AI, it's only regular AI?
It is a regular AI, yes. It is a large language model, but not the generative AI. It has guardrails and context, and it can only use content from the document folder we've specified. It cannot use content outside.
And in your experience, has AI ever surfaced a red flag in a deal that surprised your team? Say, whoa, I didn't see that. AI saw that. That is very interesting.
So, yes, we were actually happy and pleasantly surprised. So, I was telling you that before an investor speaks to an advisor, etc., we do a preliminary check to make sure the investor is legit, etc. And part of that is called KYC, or know your customer. And that requires checking who they are, legit or not. One of the investments classified an investor as accredited, and the definition of accredited used in that process was somebody who has an income of more than 200K for the last 2 consecutive years and is expected to continue to earn that much. And that was the criteria used. This one, however, was a unique one, and the system flagged it to say this person is accredited, but something's odd. And I'll explain what the oddness was. The person had no job or income. The person had a boat, though, no house either, so no residential address. Had a boat, though, and cash in bank. So no house, no job, no employment, no history of employment. But technically, he had the cash required to qualify as accredited. So he had more than 5 million of cash. So technically, he was, but the system flagged it as not regular, and it's good and bad. Maybe that person was legit, and the system didn't detect it because had not seen somebody like that before. So that's kind of part of the AI bias. It can only identify as legit what it has already seen. And so anything underrepresented might get flagged. But then in this case, it did prevent a potential fraud.
Okay, that's interesting. And so you talk pretty much every day with investors and people who are interested in private market investing. What do they think about AI? Do they see that as a big improvement? Are they afraid? Like, what's their mindset?
A little bit of both. So they get it that it might improve the processes and make things cheaper, better, faster. But again, like you mentioned earlier about hallucinations, people just assume that AI equal to hallucinations, which is not the case. AI is not all chatbots. AI is basically programming at an extensive scale. And so I think it is a plus and a minus. And so they get it will make cheaper, but what if it's wrong kind of a mindset.
Okay. And so what's your project for your company? Where do you see your company in like a year, 2 year, 5 years? Like, how do you see your company growing in the private investment market?
So we have been growing our technology infrastructure, and like I mentioned earlier, we license our technology platform to fund managers and other private market players who can leverage our infrastructure to manage their own systems, and therefore improve and get efficiency. And we see that as a big growth opportunity for us, largely because, again, as we were all talking the whole time, it is very, very manual and in documents and scanned documents, and it needs to get on board through tech to reduce costs. So that's our big driver of growth. We are also very AI native as a platform. And that whole investment process has a lot of manual labor required at every stage, whether it's checking documents, checking if the driving license is legit, if it's expired or not, when you need new, all of those things is often has outsourced manual labor involved, which I feel an AI agent can replace an outsourced manual labor. And so make it a little more faster and efficient, is how I see the industry evolving from our side.
Perfect. Well, thank you so much. So at the end of each episode, the guest answers a question posed by the previous guest. Are you ready?
I'm a little nervous, but yes.
After that, you'll have the opportunity to ask a question for the next guest. So here's your question, courtesy of Layala El Hadi, who is the executive director of FinTech Cadence. We can listen to her question right now.
I want to know for the next guest is especially when it comes to AI, what keeps you up at night? What worries you the most about AI? And if you have a solution, that's great. But if not, that's okay.
Okay. So, what worries me the most is the biases. AI is entirely data driven. And the data, as the world is coming to recognize now, is not neutral and not necessarily representative. And AI can just magnify, because just like people go and ask ChatGPT and believe whatever it says or go by it, those biases can get magnified manyfold with AI if they are not actively controlled. So, for example, if there isn't enough data on, and I'm going to take a very random example of women and heart diseases, There isn't enough data. It's been proven. There's not been enough research and tests of that. And now, if AI is being used to say what are the typical symptoms, and there is not enough about what it would look like in a 50 or a 60 or a 70-year-old women, then the answer might be off. Any kind of modeling recommendation will be off. And so biases is something that scares me, and I'm not sure enough is being done to neutralize that bias because those tools don't exist. So even if I had the intention and there isn't any data, how do I fix it? Is a problem that I don't have an answer to.
Thank you. So now what question would you like to pose for the next guest?
We'll stick to the theme of AI, and I'll keep the question a little simpler. So my question is, in the world of AI-driven content, we all get a lot of inbound of AI written emails and AI written ads. How do you choose when to actually engage with the AI content? So reply to that AI email. And when do you choose not to reply because it was written by AI?
Good. That's a wonderful question. I received so many AI written emails every day, LinkedIn notifications, etc. So yeah, I can feel it, certainly. Well, thank you so much, Khushboo. It's been an absolute pleasure speaking with you today. Thank you for joining me.
Thank you so much for having me.
And that wraps up another episode of AI Experience. Thank you for tuning in, and we'll see you next time. Hey, thanks for listening. If you enjoyed the show, don't forget to subscribe on your podcast platform. Your support counts, and your comments can really help share this experience with others. You can also visit the website ai-experience.io to find out more. See you soon for a new episode.